All right, well, good morning, everyone. John here once again with Crypto Top 10 to bring you some of the trending articles in the crypto news space. As always, off the top, thanks to everyone who has subscribed wherever you're finding this content. We really do appreciate it. You help keep the lights on in the sense that I have a reason to come downstairs and record these things. So, without further ado, let's hop on in and talk about some stuff. A little update for Chainlink, getting another integration on Polkadot. So, in a Medium post, the decentralized exchange based on Polkadot, Zenlink, has announced the integration of Chainlink's Oracle services. This way, financial applications built on Zenlink, will have access to up-to-date prices obtained safely with Chainlink oracles. Oh boy, Chainlink, Zenlink, pretty similar. Look, it's just another feather in Chainlink's cap at this point. It's not a huge deal, but Zenlink itself is something that we should kind of keep an eye on, and I'm going to get into why down here. So, unlike Uniswap, Zenlink operates as what's called a parachain. Now, it does function similar to Uniswap, but because it's a parachain, it allows users to exchange any asset. Now, this goes past what Uniswap and a lot of other DeFi automated market maker platforms can do, because they can only exchange assets native to their respective blockchain. So JustSwap can only do Tron-based things, Uniswap can only do Ethereum, and so on and so forth. Zenlink being able to do any asset really opens up its usability, and it's actually one of the key features of Polkadot, so they really do have first mover advantage in this, and I really like it. So one of the objectives of Zenlink is to build next generation cross-chain networks of decentralized exchanges that are supported by Polkadot. Its ZOK token will be the governance model. It'll provide the incentive and adds community participation capacity for long-term network development. Pretty standard for any DeFi offering to have a token. Nothing new there. Really get back to the fact that it's a parachain. It's pretty interesting. Polkadot is considered by some to be an Ethereum killer. I really hate that term. None of these coins are going to kill Ethereum. Ethereum's not going away. But Polkadot, unlike EOS before it, I think actually has a shot of growing to the point where it's an Ethereum competitor. I like competition. It forces both sides, or all 8 sides or 10 sides, whatever the competition pool is, to become better by competing against each other, and it's going to be pretty good. Polkadot is in the top 10 currencies by market cap as of August. It's fluctuated. I think it's fallen out 1 or 2 times. The overall structure of the top 10 is pretty fluid at this point, which is quite nice. Personally, myself, I look at any coins in the top 15 or top 20 as being legitimate contenders for long-term success, for the most part. Do your own research. Don't trust anything I say. But I do personally feel like overall, if you find something in the top 20, you're probably going to be good 4 years from now, but no guarantees. So Polkadot has integrated Oracle services in the past. It was actually the first non-Ethereum blockchain to integrate Chainlink. So Polkadot and Chainlink are kind of friendly already, so it makes sense why Zenlink would push for Chainlink on this. Some of the groundwork's probably already been done, as they are parachains to each other. At the time that this was done, Oracle services were implemented in the Substrate web application. It is actually considered the first step to what many think will be a full integration of Polkadot with Chainlink. So it's pretty good. I rather like the direction they're going with this, and I'm interested to see where it goes. But hey, let's hop on over and take a look at Binance. So they're claiming they thwarted an attempted exit scam. Not too bad. They announced on Wednesday they recovered about $344,000 in funds from an attempted exit scam from a project known as WineSwap. So WineSwap was an automated market maker. Just like Uniswap, it launched on October the 13th. Within an hour of launch, it had amassed $345,000 in funds, which were then promptly pulled from the platform by its creators. The funds were then spread across several different directions in a bid to get them off of the Binance Smart Chain. Majority were swapped over to Ethereum, though a portion was also sent to Binance's centralized bridge and 2 other exchanges. Binance promptly froze them, and the Binance team was later able to identify the creators of WineSwap through on-chain analysis. Interesting, probably KYC stuff as well if they were doing that. The perpetrators then returned the money upon learning they had been caught. Well, maybe that'll save them from prosecution if Binance doesn't pursue the matter, but I'm thinking they will, and that will be leniency for them. So Binance does maintain it can't control funds on the smart chain, not even by freezing them. Only those that make it to the exchange are under the company's control. The incident does illustrate how it might be possible for hackers and scammers on Binance Smart Chain to evade capture by switching into decentralized options. But because they were able to identify the perpetrators, they were able to get the money back. Now, this is really nice and it's a good fluff piece, and Binance can shout it from the rooftops, "We got money back!" It'll probably be in the title of this video to get clicks, honestly. But realistically, if they hadn't been able to identify them, WineSwap's creators would have made off with over $250,000. And depending on what country they're living in, that would have set them up for life. So, good on them for catching it, but again, be very, very careful with any new projects you are investing in. Do your research. But all right, let's hop on over. We got to talk about Grayscale, because they just got their largest ever weekly inflow. Yeah. So they saw this inflow of about $215 million, or almost 1,600 Bitcoin. It surpassed all previous investments into the trust. The firm now holds $6.7 billion worth of Bitcoin, or 481,711. Should the firm continue this month's that month's growth rate, or just any growth rate, Grayscale is on track to hold 500,000 Bitcoin, or 2.7% of the current circulating supply, within the next 3 weeks. So by the end of November, probably by Thanksgiving. Yeesh. By the end of next year, if they continue investing like this or getting money inflows like this, which I actually expect it to increase, Grayscale could control up to 5% of Bitcoin's current total supply. That is mind-boggling to know for a fact that 5% of the current supply is being held by one entity. It's nuts. Also, it's probably one of the main reasons we're getting this price drive that we're seeing. More and more people are sitting up and taking notice of this. Now, Grayscale does have a number of investment trusts. They have an Ethereum one, Bitcoin Cash, Litecoin. I'm trying to think what else they have off the top of my head. I cannot remember, but 70% of their weekly inflows have been into the Bitcoin Trust. It's got the biggest name recognition. It's what people are most interested in. Last week, they actually published their second Bitcoin investor study, in which the firm found U.S. investors were interested in investing in Bitcoin, and that it had grown from 36% to 55%, going from 2019 to 2020. So again, more and more people are sitting up and taking notice. More and more people are buying. We're heading for a new all-time high, and I cannot wait. Ooh, I cannot wait. So yeah, let's hop on over. We touched on this yesterday, but the news continues. Ethereum is inching ever closer to 2.0's upgrade, phase 0 to be specific. Last night, during one of the most divisive U.S. elections in history, probably second only to 1876's election. You can read up on that if you're a history buff. It's pretty interesting. But the tool to create Ethereum 2.0's deposit contract was silently dropped on GitHub. And the GitHub release reads, "We have a go for main engine start," and a little rocket emoji. So, nice. This tool does represent a pretty nice step towards phase 0, which will be the inaugural stage of a staggered 6-phase rollout. Phase 0 introduces a proof-of-stake consensus mechanism, which will allow validation of transactions on the Ethereum network, which is more efficient than mining. In order to get users staking and the proof of stake chain in working order, funds must be migrated from Ethereum's current blockchain to Ethereum 2.0, which is where the tool comes in handy. Phase 0 is expected to ship as soon as the deposit contract is functional. And it looks like it's pretty much functional. So after months of setbacks, strenuous testing, and copious audits, we're almost there. They said by the end of 2020, and I'm hoping it's by the end of November. That plus the hype for Bitcoin, the top two coins could realistically propel us into uncharted territory. And I absolutely cannot wait. So getting on into the back half of things, a little update from Telegram. They just got ordered to pay $620,000 in legal fees. Yeesh. So the claim does revolve around the use of the GRAM, G-R-A-M ticker symbol from Telegram's would-be crypto. The token originally intended to be used with the Telegram Open Network. We've talked about it on the channel in the past. They launched everything. Them having to pay this fee comes after Telegram's much talked about and messy battle with regulators over its supposedly unregistered token offering. In the end, the SEC submitted that the GRAM offering, which raised in excess of $1.7 billion, violated federal securities laws. As a result, Telegram had to pay back more than $1.2 billion to investors and was slapped with an $18.5 million civil penalty, and they ended up having to abandon the TON project, the Telegram Open Network project. They had been fighting with Landhath over the GRAM ticker symbol for some time, but with TON dead in the water, they had to drop the lawsuit, which meant they incurred those legal fees. So not the best year for Telegram. I don't know about you guys. I've used Telegram to stay up to date on some cryptos, but those message boards tend to devolve into trash pretty quickly. I have it on my phone. I check it every once in a while, but it really does not deliver me the amount of information it did at the beginning. So I know they're struggling, but they are one of the biggest ways that crypto information was being spread out there in like 2018, 2019. So I felt it was worth talking about. Kind of wrapping things up. We got a couple more articles, but Bitcoin price is retesting 14,000 as the fourth richest Bitcoin wallet is emptied. This is more interesting than anything else. Whale Alert recorded the movement of the fourth richest Bitcoin wallet. It was created back in the Satoshi era, and the wallet was emptied after making a 1,369 double nice Bitcoin transaction for almost $1 billion. The funds have moved from a legacy wallet to a native Sedgwick format wallet. So there's a lot of speculation on why, and especially with an old wallet like that, there's a lot of mystery surrounding it. And a lot of people are wondering why someone would move that. Well, back in September, the wallet had gained exposure when it became known that hackers were trying to steal its funds because it was so old. It seems unlikely that they succeeded, though some would like to speculate that a person was able to. I mean, it's entirely possible. According to estimates, a hacker could make 1 trillion guesses to try to obtain the private keys to a Bitcoin wallet by brute force. It could take them 3.3 decillions of years to accomplish it. However, if the random number generator gods smile upon you and RN Jesus blesses you, you could get it quicker. It's just random. But it's highly unlikely. What's more likely is that the owner of the funds caught wind of this and moved their bitcoins to detract attention from their wealth, as well as moving over to the Sedgwick format wallet. They can make updates to their security and make it even harder for hackers to guess it. Not too bad. And for those of you who don't know, Bitcoin touched 14,000 again pretty briefly. There's a lot of speculation going on that it could have been caused by this. It might be the presidential election. It might be this, that, and the other thing. It's a combination of a lot of things. Things are pretty uncertain right now, so take all that with a grain of salt. Bitcoin is still well on the way to a prosperous end of the year. But to wrap things up, a little update. So according to a November 3 announcement from South Korea's Financial Services Commission, virtual asset service providers within the country, so crypto exchanges, will no longer be able to handle any digital assets that they consider to present a high money laundering risk. These updates were made as part of the guidelines under a Special Payments Act. Basically, they're calling out dark coins or privacy coins. People are thinking it's probably mostly going to be Zcash, Monero, and Dash that are going to be affected. The Financial Watchdog's amendments to the Special Payment Act are expected to be enforced starting in March of 2021. So any Korean exchanges that have those coins on them will be forced to delist them at that time. Of course, many crypto exchanges in the country already don't list the privacy coins due to existing international regulations. It's just easier not to have to deal with it. Still, though, it does present another blow for privacy coins. I personally don't think they make the cryptocurrency space any less safe by existing, but governments like to be able to track where funds are going, and that's just it. I consider privacy coins to be more akin to cash, but any government is going to tell you they want to get away from cash. There's a multitude of reasons. It's cheaper not to deal with cash, and it's more secure for them because they can track transactions. It makes crime harder. But yeah, that will do it for the trending articles in the crypto news space. My name is John. If you've made it to this point and you're not subscribed, please do. It's a simple click of a button, and you can get updates from me on the regular. Help me keep the lights on, so to speak. And always, if you check down in the description any of the articles you talked about today, there will be a link to the YouTube video, and down in the description of that YouTube video you will find links to the articles themselves. Or if you're finding this on YouTube, well, lucky you, you have one less step. Either way, I try to make things available for you guys so you can do your own research. Taking a look at the top 10 crypto coins by market cap, USDC coin snuck in the other day. It is now the 10th coin, so 2 of the top 10 are stable coins, so I don't really like to look at them. Bitcoin is still up 1.51%. It's currently sitting at $13,948.99. I could see that clipping above 14K again today. Here's hoping that it not only clips above it, but smashes through it, heading to 15, 16, or 17,000. Ethereum is looking like it might be getting ready to test 400 again soon. It's at 391.20. It's actually up the highest out of the top 10, up 2.14% on the day. In the top 100, hedge trade is up 31.37%. They are the big winner today. The Midas Touch Gold coming in second place today. It was actually the winner yesterday of being up the most, and ABBC coin was up the second most yesterday, now up the third most, so they are doing pretty well day over day. In terms of biggest losses, Yearn Finance is down 11% on the day, and then Avalanche, or AvaX, is down 9.82. Oof. And VeChain's suffering a little bit, down 15% on the week. So a lot of red in the market, probably due to all this uncertainty, but there are some good signs here for Bitcoin and Ethereum, which statistically, those of you listening probably have some money in. So let's hope they smash through those things, and then we are hit with a flurry of altcoin season right after that. So that'll do it for Crypto Top 10. Again, my name is John. I'll be seeing you guys soon. Peace.